All right. Welcome to the Cannabis Marketing Live podcast, where we cover the latest marketing strategies and trends that are most effective in growing your cannabis dispensary, delivery service, and brand. This podcast is sponsored by MediaJel. MediaJel is the leading cannabis marketing platform, helping cannabis brands reach consumers through mainstream media channels. I am your host, Guillermo Bravo, and today we're discussing how to be a marketer with an investor mindset. I'm super excited to introduce Mike Bibbey. Mike is the former VP of marketing at Ethos Cannabis, bringing 15 plus years of digital marketing and demand generation experience to today's podcast. Welcome to the podcast, Mike. Nice to have you back.
Hey, nice to be here, Guillermo. I always like your podcast. I'm happy to be part of it.
We love having you on. Well, let's dive into it. Marketing budgets are one of the first items to be chopped during uncertain economic times, right? In 2020, I remember, cannabis retailers pulling marketing budgets completely off the table, while others are, doubled down. You are one of the companies that doubled down. Many that pulled out, they didn't reap the rewards. So, during a recession or downturn, you'll likely be getting pressure from the CEO, from the CFO to cut costs. If you can't come to the table with a data-driven plan for which marketing investments are driving the most traffic, and more importantly, revenue, you'll find yourself dealing with some serious budget cuts. Instead of considering marketing as a financial line item, why don't more companies view marketing strategies as investments? We all know the value of marketing initiatives, so why do you think they're the first line item to be cut, Mike?
That's a big question. I think a lot of it is some misunderstanding and primarily a lot of miscommunication about how marketing works and how it works as an investment, as part of a budget and so forth. And everybody's got an opinion about marketing. This is good marketing, this is not. Why aren't we doing this? Why aren't we doing that? And being able to the challenge is to make sure that you're on the same page as the financial people, the CFO, the CEO, really understanding what they're trying to achieve and how to use marketing to support that. They've got tough jobs, right? They're trying to balance, top line revenue and bottom line profitability and all the different expenses that come in between, and being able to align and support that and make sure they understand what the investments are, what are the marketing tactics and strategies that you're doing, talking about, what used to be called above the line and below the line advertising now is often classified as brand versus performance. And, people think about those differently. Some people think one is good and the other is bad. And I think as a marketer, you have to understand that they both have their place. But in terms of the way you can communicate and support those from a financial perspective is quite different. And it's a matter of making sure that there's a common understanding between the marketing team and the financial team, and that you can talk about those challenges and the kind of the risk profile, and make sure you're on the same page. There are different situations where, as you said, you may want to pull back and be conservative. There's other situations where someone would view that as an opportunity. Say, look, if everybody's pulling back, that's an opportunity for us to lean in and grab market share. And if you've got the same understanding, you understand where your financial people are at from that perspective, you can really get on the same page and build a program that you understand where, if we need to make cuts, where they will happen and what the kind of the factors will be, and it can talk through that with the financial team. So, I've seen so many situations in my past where there is an alignment there. The financial team doesn't understand what the marketing team is trying to do. The marketing team isn't paying attention to the ratios and the numbers that the financial team is trying to get to, and that disconnect, makes it kind of it could be contentious at times, and it could set you up for having to slash budgets in ways that you don't think make sense for the marketing department. So it's a challenge, something that people need to learn to work through and understand how different people see parts of that business, and get on the same page.
Yeah, the CFO doesn't understand the marketing concepts, right? So on the economic downturn, there's less people that are advertising, there's less people that are bidding on keywords, there's less people investing on digital advertising. So on our side, the opportunity is there. If you do have if it is a priority to really double down in that time frame, then your cost per click is going to be lower. Your return on ad spend is going to be higher. Performance is going to be better just because of lack of competition alone. So, I mean, as a marketer, it's just wide open there for to get as much market share as possible.
Absolutely. And you have to understand those opportunities and those factors. I mean, you talk about 2020 was a challenging year.
Oh yeah.
All kinds of different aspects, right? There was economy stuff. The cannabis was still growing quickly and trying to ride that horse and continue that growth. There were huge opportunities you talk about with the market availability that just didn't make sense. If you talk about advertising opportunities, there was so many outdoor opportunities, local advertising, event opportunities that were baked into people's budgets that we thought were good stuff. And when you took a hard look at that and realized people were staying home, people were not out, all of a sudden outdoor advertising didn't make sense anymore. The event opportunities weren't there. So those are obviously things that it's easy to agree. Okay, we need to cut those. We need to slash the spend in those areas. But then the challenge and opportunity for the marketer is say, okay, where do we redirect those funds? How can we drive those into revenue and really capture the audience that's there? And in 2020, it was people shopping from home. They were staying at home. They were shopping on computers. They were shopping on their phones. So we chose at the time to really double down and lay into digital. And really, as you said, we reap the rewards. We really grew our business quickly by kind of taking that approach. 2022 is a different animal. 2021 was different. 2022 is different from both the market economic standpoint, as well as just the cannabis business in general has changed quite a bit. It's so much more competitive now than it was even 2 and 3 years ago. So you really have to stay in tune with what's happening now. Learn from the past. Bring learnings from other categories outside of cannabis helps a lot. But when you just be able to identify those, if people are pulling back, are they pulling back for the right reasons, or is that really creating an opportunity that you can leverage and lean into? And do you have the support from your executive leadership to really take those risks and maybe sacrifice a little bit of margin in the short term to really build that base and solid brand going forward?
Yeah, and also being aware that 2020 and 2021 weren't you can't really use those years as benchmarks. Like they were inflated by all these other reasons, and it's hard to use that as a comparison point for your growth. I'm seeing it a lot for this. This year people are struggling. There's some people are struggling. There's reduction in disposable income. There's all these other factors, inflation. And that has definitely hit the bottom line and reduced the average order or average ticket for, across the board from what I've seen. So
absolutely, it's kind of a flattening of top line revenue, across the country. It was it looks flat because it was too high in 21. There was most money in the market and so forth. So it ramped up too quickly and it's kind of plateaued. So you get kind of this challenge of plateauing top line, but then lots of new business coming into play, a lot more plants in the ground. The supply is higher than it's ever been. So now you've got price compression, and that's a whole business challenge and marketing challenge as to how do we compete with kind of that the lowering of the average order, the lowering of the unit price, and still build a profitable business.
100%. And as far as the marketing side, like what KPIs and data tracking needs to be in place, for a business to assess investment risks and guard investments with proven impact, so they can, stop thinking about marketing as a cost center and more like a revenue driver.
Yeah, that's kind of the heart of performance marketing perspective, right? Where you want to be able to track everything. You want to have your analytics in place, Google Analytics on your website, your POS data, using some data warehousing to really understand impact of your marketing spend. Yeah. And that's where your financial people will really get on board. When you can show them, here, we spent X dollars in this channel, this tactic, and it touched this amount of revenue, and that ratio is good. We need to lean into that. We need to spend more money there. Or we tested this new channel and it didn't return, so we're going to scale back on that. So having as much tracking as you can in place to be able to say, look, here we spent in this channel and it returned these dollars. That's the heart of performance marketing, and that's the easiest for the financial people to really get behind. It's a much different challenge on the brand side when you're trying to build awareness. You're marketing products that are sold in third-party stores where it's much more difficult. You don't have that direct tracking, linkage. There's things you can do with brand awareness surveys and so forth, and trying to piece together dollars through your wholesale channel, but it's much more difficult, a lot more gray area on that side, and that's where you really have to be on the same page, because you're not going to be able to support that with as much data as the financial people typically like. But if they understand, okay, brand building is still a great concept, and it's a way, kind of a critical way to build businesses, and it's different than performance marketing, and understanding kind of the balance between those. That's where being on the same page and having that communication will help support the brand investments during those tough times.
100%. I mean, you really have to track everything that you're doing. If you can't track the sales, I mean, CFO is going to cut it pretty quickly. I mean, how do you deal with billboards? You can't really track that. How do you deal with pitching that to a CFO when you can't really track the results from it?
Exactly. Billboards in particular are tough. And a kind of a big, above the line branding campaign in particular is very difficult. You have to think in really big picture, we're going to spend big, and then we're going to affect a large audience, and we're going to see pull through our own dispensaries plus third-party dispensaries and so forth. So that one is much harder to support, where you have to be aligned and understanding, okay, that's an instance where you have more of a fixed budget. Okay, we're going to spend X dollars during this time period. And you need to make sure they understand the difference between that. Okay, for this branding campaign, we're going to spend X dollars, and it's kind of fixed. We're going to go out and do it. On the performance side, we're going to build kind of budget similar. Okay, we think we're going to spend X dollars and drive X% of revenue, but this part of the budget needs to be flexible. We need to be able to run with it. If we see something that we can really scale and go after, let's do it. Let's make sure we have that flexibility to go above budget in some cases. Or the conversation would be, well, that's great, but we need to take money out of this other budget, and you can talk through those. But also understanding that, look, we thought we were going to spend X million dollars in this channel, and it's not paying off. We're not seeing the return, so we're going to scale that back, and we're going to try and find some new avenues. I'd say one of the best kind of examples of that situation was, when I spent several years with Fanatics, the sports apparel retail. And we had these weekly market meetings where the marketing department was reviewing performance and opportunities and so forth. And the best thing there was we had the CFO actually sat in on those meetings. Wow. And all the marketing people were talking through what they're doing, what their top line was, their bottom line contribution margin was. And we would have those open discussions. Someone would find an opportunity to say, hey, there's a new social experiment that we're doing, and it's really paying off. We'd like to lean into that. Yeah. And the CFO is there. We could say, look, here, this is an opportunity. This is not money that we had in the budget, but it's got a great return. Can we get some money to go into that? And there would be times where the CFO would say, we got a tight month. Let's be careful. Let's not do that now. Let's put that off and talk about that next month. Or there'd be other situations where they'd say, look, our bottom line is looking really good. Yeah, let's go. Let's chase share. Let's chase revenue. And just being able to have those conversations. She understood what was happening and how we were thinking about the business and investments, and was on board that we were making sound decisions. And some of the time it was great. Yeah, go forward. Let's do that. Other times it was the timing's not right. We're struggling with a couple of other parts of the business. So let's be conservative here. And just being able to have that conversation and change gears in a dynamic, kind of real-time fashion. That's where you want to be, and having a tight relationship and participation from the financial people just makes that stuff work so much better.
Yeah, that communication is key, and then the ability to reallocate the budgets where you see fit to maximize revenue, right? I mean, that's in the end, that's the end goal.
And being able to talk about performance. Yeah, we're spending money, and here's where nobody's guessing. It's you don't have the financial people sitting in their office and where's all this marketing spend going? What's it? Is it producing? Being able to share that, to talk through it together, is that really helps everybody get on the same page and moving forward in the same direction.
100%. What percentage of gross revenue should be allocated to a marketing budget? Do you have a range?
That's a tough call. Historically in a retail business, as you're scaling up, ramping up, you could go 10 to 20% of revenue spent on marketing, trying to grow, right? Yeah. In a more mature business, that comes down, it can 5 to 12% of total revenue, depends on how competitive your environment is and how discount heavy it is. I found in cannabis companies, it's very challenging there, particularly with people who were in the business, 3, 4, 5 years ago. when you didn't need marketing. You just stock the shelves, open the store, and the line forms and stuff flies off the shelf, right? There's still a lot of people in the business that think you don't need marketing. People are going to buy, people are going to find you. And so when you've got those people that you're working with, it's much harder. I see a lot of cannabis companies are working with less than 5% of revenue as their marketing budget. And so that limits a lot of, kind of that brand building opportunity that you have. So understanding, you're the perspective of the CEO, the board, the financial team, and what they think are the numbers there, and being able to talk through those and understand, okay, if we have 5% versus 10%, what would we do differently? How would we be doing different things, and kind of coming to agreement, aligning on what that should be. And I think the most important thing is building that flexibility in, is that it's not a number. If you can talk about ratios and percentage of revenue ongoing, so that if you're blowing the top number off the revenue, you should have more money to spend on marketing and
exactly
driving the bottom line, which in that case, everybody wins. And that's how you want to be aligned.
100%. Yeah. I remember working with different campaigns, and the ad spend was really the thing that we would look at. So if they had let's say they had a $50,000 monthly budget, we could put together, based on return on ad spends that we know from, let's say, paid search, SEO, programmatic, SMS, email, et cetera. So we would know the return on ad spends on them, so we can actually forecast what the revenue would be based on those ranges, right? So you can create different scenarios. They're like, hey, if you really want to do a brand awareness first play, this is what you would do. This will be your return on ad spend. If you want to do a performance base and you're really just trying to drive revenue, here's the type of campaign that we recommend. And if you increase your budget from 50,000 to 100,000, this is the increase in revenue that you can expect. And that was the case that I've made, and a lot of proposals to get people to increase their marketing spend is, forecasting and putting together accurate forecasts that's and hitting those forecasts, more importantly, right?
That's the ideal, is when you can accurately forecast. That's easier said than done.
In this industry especially.
The other part of that is, I always suggest people build a testing bucket into their budget. 10%. If you got $1 million budget, earmark $100,000 to test things that you don't know, that you need to figure out what is the ROI, and keep an open mind. Your team at MediaJel has brought a lot of new good ideas to me over the years. Things that either I hadn't thought about, or things that I would have just dismissed. That I don't think it's a big opportunity. But you guys were confident in it, and we were able to set aside some money. Let's test it. Okay, let's find a way to set up a test and figure out if it makes sense. And then if it does, let's make it part of the go forward plan and budget appropriately. But there's so many new things happening, good ideas, things that are available to traditional marketers, digital marketers, that are not available to cannabis yet, that are kind of slowly coming on board. They behave a little bit differently in every product category. So being able to figure, okay, this worked great in shoes or apparel or housewares and so forth. You got to figure out, does that work in cannabis? It's a different business from a lot of different perspectives. So bring in those good ideas. Let's find a way to test as many as we can, and hopefully we cull out the winners and the losers pretty quickly, and continue to build a flexible plan going forward.
Yeah, I know that running ads on Bing was one that I didn't really expect to work, and hey, it did.
Yeah. I thought Bing was dead at one point, and
so did I.
It's finding its own little niche. Google's so dominant, but there's some neat opportunities there that people can quickly dismiss. But if you take the time and test it, you can put some data behind that, and whether or not it's part of your plan or not, it all depends. But I like to be open-minded and try those things when the opportunities come up.
As digital marketers, we have a direct influence on consumer decisions and purchasing behaviors. What is a must-have mix of short-term and long-term investments that every cannabis business should include?
Short-term, you need to be kind of in the purchase funnel. Be where people are shopping, where they're looking for products, which predominantly is Google, right? That's the consumer behavior. You're looking for a product, you go to Google and you search for it. So Google's got so many components. It's easy to say just Google, but you've got SEO, you got paid search, you got business listings. Sometime, hopefully, we'll be able to do product listings. There's different components there, but that's real kind of bottom funnel, middle funnel opportunity where people are in market, they're shopping, they're looking for stuff, and you want to try and win that customer as opposed to your competitors. So those are definite. You need to have those in as long term, but particularly short term, you don't want to turn those things off. That's where you can kind of get off the rails pretty quickly. So definitely those, the bottom funnel are critical. The longer term, social today, without being able to do paid social in cannabis, where we put some of those kind of click-through metrics and tracking metrics in there, it's all very kind of nebulous. So that's a long-term, you want to build your brand, you want to build your reputation, you want to be in front of people who are on social, okay? We want to be in front of those customers. You don't have the direct kind of tracking metrics, revenue metrics that you'd like to, but again, we think that's a good long-term opportunity. Same thing with event marketing, traditional above the line marketing. That stuff is more long-term. Okay, we're building recognition, we're building a brand, we're building a personality. So those are more long-term. You got to think about those differently. You got to make sure you're on the same page with kind of the risk profile with your investors and your financial team to understand when you should continue to lean into those or when you need to pull back on those. But I mean, if your CFO is telling you to slash Google, you really got to stand up and show your numbers and make sure that they understand the kind of the impact of reducing some of those really kind of critical channels.
Yeah, I mean, SEO has been key to growing all the retailers that we work with. And I always praise Google, and I know that they own the market, they own the search market, right? They have 93% of all searches, I believe, in the US. So they have a monopoly over searches, and people go to Google over any of the other cannabis marketplaces like Leafly or Weedmaps or these other platforms. They don't go there, they go to Google. So really keeping that in mind. And SEO is a long-term investment that compounds over time, right? So you build your trust and authority with Google, and over time, you'll reach these different levels as organic traffic. And once you hit these different tiers, anything that you create or any content that you put out there will rank. But you do have to it does take some time to build that trust and build that authority, because Google doesn't want to let anyone be at the top of the search results. They want to provide the best custom user experience for people using Google, right? That's how they grew their business to one of the most valuable companies in the world. So it's for me, I always prioritize SEO as that's probably going to be 50% of your online revenue between organic traffic and Google My Business traffic. So I'm really bullish on SEO. Same thing, really build your customer database, right? So have those opt-ins on your website, whether they're coming through a shopping cart, or coming through a form fill. Make sure that you're building your customer database, building that first-party data, getting them into your loyalty program, into your CRM, and then engaging with them through email, SMS, and push notifications, right? Like those are very efficient ways to grow your business. And then on the brand awareness side, like you said, on the short term, social media is one. You got paid search if you want to run a GDN or Google Display Network campaign, programmatic advertising. There's a ton of options out there, and it's definitely a misconception that you can't advertise cannabis online. There's a lot of the tools are becoming available, and it's when I saw the news of they're allowing radio and TV ads for cannabis. I think that's we're going in the right direction, but I also think it's the same with the old school marketing tactics that you can't track. So it's like, if you want to continue to do billboards and radio ads and TV ads that you have no idea the return on ad spend, and we're kind of at the same place. So it's when I look at that, it's there's a lot of opportunity. I think we're going in the right direction. I do not think social media will allow paid ads anytime soon. I think that cannabis will have to be decriminalized before that even happens. Facebook's a public company. It's I don't think they're going to move anytime soon on that front. So invest in your social media on an organic side, create content, grow your following organically, engage with your customers, but make sure that you kind of walk that thin line on what's allowed and what's not allowed on social media, especially, right?
Right. Yeah, something that kind of ties into what you've been talking about is there's no silver bullet. You need to have a big pie of opportunities. I with a pie chart every month. Here's where is my traffic, my revenue coming from, and I want as many slices and balance in that pie as possible. If you're overly reliant on the endemic directories, the leafly and weed maps and so forth, you're probably in trouble there. You don't want to be overly invested in that. They serve their purpose, so they're good. They need to be part of the mix, but you got to have balance. You talked about the CRM, the email, the text, the Google, the display. You need to have lots of different opportunities, because as the market changes, you got to be able to react. Some of these companies choose to do business, not do business. We see quite frequently, not as frequently as it used to be, but social media accounts being turned off. And big companies losing social media accounts for various reasons. So
and they invested millions of dollars sometimes in those accounts.
that's frustrating outcome.
Yeah, I mean, I stopped doing managing social media back in 2017 because that was happening to me back then, and the founders or our contacts there, they were just pissed off and they didn't want to throw money down the drain. So, what's the alternative? SEO? Perfect. And Mike, what's your, as far as marketing tactics, which one do you prefer as far as growing market share? I don't know if you have top one or top three.
I think that's where you gotta have a bunch. You gotta have multiple pieces to that pie. And you got to think about acquisition, retention differently. Retention metrics or retention tactics are different than acquisition in many cases, and in some cases it's the same. When you're advertising Google, it's both, right? You're trying to acquire new customers, you're trying to keep the customers you have from going to competitors. So there's a bunch. You got to have them all. You got to have the SEO, the paid search. Business listings are critical in a retail business. If you're selling product, you're a cannabis brand. You don't have the business listings as an important part of your mix. There, you're into more of the broader awareness type issues. So you got to be flexible. It depends on the company. Depends on the product you're selling, the market. We're still seeing some states that are super competitive with price compression that you've got to do a little bit differently than some of the limited license states that once you get in, you've got a smaller competitive set, kind of a bigger opportunity to win there. So it's different. There's no, like I said, there's no silver bullet. You gotta take this suite of opportunities and kind of figure out the right balance and mold for any particular market.
As far as a marketing budget, if you had $100,000 per month for marketing spend, like how much would you spend on customer retention? Like, including CRM, maybe running some retargeting campaigns. Like, how much would you allocate to just nurturing your existing customers and really just holding your market share, right?
Yeah, it's hard to say what that balance should be. It depends on your growth cycle. Are you small and you're growing quickly? You've got to acquire. So your retention spending is still going to be there, but in terms of a balance and a percentage, it's going to be smaller. And if you're a mature business and you still want to acquire customers, but you have a good customer base that has a high retention rate, then your overall mix is going to tend towards that retention. So it's all about understanding the underlying metrics. I mean, what is my retention rate? Is that a strong retention rate, or do I need to invest to improve that rate? I always like it to be better, right? But at some point you've got a kind of diminishing returns. So understand what are the metrics and what can we do, and from a retention standpoint, reactivation standpoint, that makes sense in terms of the financial ratios and metrics. And that's the conversation with your financial department. It's okay, we've got an opportunity. We need to balance the budget in this aspect, as opposed to acquisition is typically going to be a higher cost per sale, right? For advertising perspective. So that's going to be maybe a higher expense, and kind of balancing that. again, it's hard to recommend what that ratio budget should be. It's different for
No.
different companies, markets, company size, and so forth.
Yeah. I'd probably at least do 10%, like as a benchmark, just to protect your brand, maybe put some money towards protecting your brand searches on, paid search.
Yeah.
That's a no-brainer. There's not too many people that are bidding on competitors' brand names, but just to be safe, right? And then, your CRM, like if you have a big database, you definitely should be investing heavily in your CRM, whether it's, Spring Big, Alpine IQ, Happy Cabbage, some of those, CRMs are within the cannabis space, but then also, looking at like Klaviyo, where you can do abandonment cart automation, and there's different tools for different parts of your business. So it's making sure that you are taking care of your customers, because right now it's like you said, price compression is a real thing, and people are competitive price shopping. They're looking at the 5-10 dispensaries in their market, and they're looking at all the menus and seeing who has the best deals and going where they can get the best bang for their buck. And that's a real thing in the cannabis space, and it's only going to get worse with downturn in the economy, lower disposable income, more cannabis retailers coming in the market, depending on which state you're in, potentially a 70% plus or more drop in the price per pound for flower can have an impact on that. So there's a lot of factors that you need to be aware of. And there's anything that you should really be considering, Mike, when making investment pivots during times when product demand and there's a lot of uncertainty in the market? Like how do you make those decisions?
That's where you got to be in sync with your finance. You need to build in that flexibility. Okay.
Yeah.
If tactics are not working anymore, then we're going to take money out of those tactics. If there's something else to move that into that's producing return, we need the flexibility to move money into there. But you can't surprise the CFO and say, hey, we switched last month and we spent an extra $200,000 here. It's going to get you in trouble. Giving them the heads up, hey, we're seeing an opportunity here. I'm going to test a little bit of money here, and we're going to slowly kind of move that direction. I'll keep you posted at the results and how we're progressing there. But just it's all about flexibility and being on the same page. There's companies you're going to work in where your financial team is just not going to have that perspective. They're going to say, look, we forecasted revenue down. We need to reduce budgets across the board to keep our ratios intact. And then that's just reality. That's going to happen. Various companies at time to time, and you have to be able to understand that and kind of defend and support the ones that really make sense, and understand if I have to trim my budget 10%, 20% and so forth, where am I going to trim that I'm going to have kind of the least impact on revenue performance. And it's not easy. Those are tough decisions and tough conversations to have, but it's reality. It's part of business that we deal with, and having that good communication, be on the same page with the financial people is critical.
Yeah, and as far as the reporting, like how do you create like custom decks or custom reporting so that you give access to these marketing metrics to the CFO, or do you just create like custom decks and report to them on like a monthly or quarterly basis? Like what does work for you?
Yeah, what I found is most of the time I have to push that information to them.
Okay.
Them access. I like to have data available, right? Anybody should be able to see data and see the performance, and there's critical pieces there that you got to have people looking at the same data. Too many times in the past, you've got different systems, and someone's pulling revenue from here, and someone's pulling from someplace else, and there's a different definition. Sometimes it includes discounts, other times it doesn't, and that's where you can kind of get into trouble. So if you can share your perspective and allow them to see it and pull data for timeframes as they see, that's great. What I found is there's some people who like that. For the most part, people like to know that it's there. They like to know that they can double check that they need to. But at the same time, for some of those important decisions, it's really critical that you share information with them on a somewhat frequent basis. Sometimes weekly, if you're really kind of in the hunt. A lot of times the comfortable cycle is a monthly update. Okay, here's what we're seeing. Here's changes in performance from last month, and here's what we're adjusting for the upcoming month. So you got to be let them see the data, let them have it if they want it, but at the same time, don't expect that they're going to go get it and have the same perspective as you. You've got to kind of evangelize and share and communicate your perspective and viewpoints and outlook for how things may change going forward.
And do you present this information differently to the CFO versus the CEO? They may be looking at different, and even the board, right?
Yeah, it depends. Some people are really into it. I like to be able to really sum it up. I think that's a challenge, is being able to make it concise. We're, as a marketing team, culling through spreadsheets and reports, thousands of rows of data, and summarizing and making assumptions and so forth, and then being able to really kind of cut to the chase and simplify that and make it simple and digestible. That's really key. But then allowing, you may have some financial analysts that really want to dig in and do their own regression on that data, and giving them the flexibility to do that is helps build those relationships as well. You're open, they can dive into the data, and if they come to different conclusions, you can talk about that. But I think the real value is being able to really understand it, distill the insights, and then communicate it in kind of active ways that you can actually make changes and look forward with what you're going to do, what you're going to change, and how you think it might affect performance.
Yeah, as far as like making, if you're seeing some marketing channels work really well, how do you plead your case, to the CFO to get more money, and like how fast do they allow you to do that? Like, I know you said, set some budget aside that can be flexible, maybe 10% that can go to whatever you see fit. But can you make those changes every month, or is that every quarter? Or does it change based on, KPIs? I mean, it's
complicated. It's understanding what they're trying to achieve, and where they're at. I mean, the financial bill, it's a tough job. They're challenged with putting together a financial model that's going to work, and that at the end of each time period, quarter, year, that you can go to the investor and say, see what I told you we were going to do at the beginning of the year, we did it, and the numbers line up nicely. And it's a kind of an ongoing juggling responsibility on there, and to make sure that they're kind of meeting those objectives, and you have to be part of that as the marketing team. So if you can help them understand, okay, look, we doubled down on this marketing activity, and it generated that 20% revenue increase we saw last month. That's because of this, and the expense ratio was such that it was accretive on the bottom line, the EBITDA line of the sheets that they're working with. If you can go to them with that, there's a lot of opportunity for them to say, yeah, let's continue to work with that. I like what I'm seeing in those dynamics. So there's many times where you'll have that conversation. You'll have other conversations where you'll have that, and you're seeing that you don't have the visibility. There's other challenges in the business. We've got growing costs from suppliers or freight costs and so forth. So even though you did a good job, you reduced your marketing budget, our overall or your marketing contribution percentage, the overall profitability didn't change last month. So much as I'd love to spend into that, I've got to watch those ratios, because we're coming up at the end of the quarter, and I've got to kind of meet the targets that we're working with. So understanding that and being able to talk through that, and not just getting the harsh, no, don't do that, stick to your budget. That's kind of hard pill to swallow. But if you can have that conversation, and it's something that you've built that confidence over time, that they kind of, and how you're looking at things, and you understand how they are, and you can talk about things and kind of come to a common resolution is what really makes teams work and companies work going forward. So it's being flexible, understanding other points of view, and coming to realistic outcomes is important.
Yeah, just got to make sure you do anything in your power you can, to really align with the CFO and the CEO, and your team. You have the same goal in mind, right? So the goal is to grow revenue. The goal is to whether expand locations, to grow the presence of a brand in a certain state, whether if you're vertically integrated or not.
Yeah.
So there's a lot of factors that come into play, and
understanding the goals. What are the financial goals? I mean, there's still a lot of companies out there that are not concerned with profitability. They're trying to build market share, right? So they just want to grow revenue, and that's a whole different approach and conversation than a company that is really trying to watch profitability and grow profitability at an incremental kind of predictive rate. And those are different perspectives. One isn't better than another. They fit in different situations, scenarios, and just understanding, as a marketer, how you fit into that. What is the perspective, and how are they looking at things, and how can we get on that same page and make sure that I'm not trying to protect profitability and they're just trying to grow a top line, or vice versa. That's when you can have some of those conflicts.
Yeah, exactly. Make the CFO your best friend. Can you tell us maybe a favorite campaign that you executed on that was tied to a financial metric that you knocked out of the park?
I don't know a particular campaign per se, but just when I got started in this business, the company I was working for was had some of that history where there was not importance put on marketing. Let's stock the shelves high, and people are going to show up and we're going to sell product. We don't need to spend on advertising and marketing. And so we started very conservatively. There was some understanding of, okay, yeah, we need to build a customer list, and we need to communicate with them, keep those customers coming back in after they've come. But we had a very restrictive budget. It took a long time to kind of build those financial relationships and understanding forward. So initially we were very restricted on the money, and we were not using kind of performance marketing, flexible budgeting tactics. We had X number of dollars, and I had to build a fixed budget. Okay, I'm going to spend this number of dollars on Google each month. And what I was able to do is work with your team at MediaJel and the analytics, the data we had, to show that we were underinvesting, and that we could change the top line revenue if we could spend more on that channel. And the ratios were great. We were making a good return on ad spend. We were going to grow that top line. And so after showing them that, kind of the aha, we realized, okay, we need to think about marketing differently. There's an opportunity here. And initially it was like, okay, let's add a few more dollars. Let's double that budget and see how it goes. And we were able to come back the next month and say, okay, we did that. The ratio stayed the same. There's a bigger opportunity, and finally got to that point where we had really complete flexibility there. If there was, if it was working, we continue to go on a daily, weekly basis, make changes to that, the dollars we were putting into that channel in particular. Within limits. There was at least a monthly conversations, oftentimes more often than that. Hey, we're increasing this. We're up to X dollars. Just a heads up. We're still meeting the metrics. Last thing you want to do is come back with that surprise. Hey, we spent an extra $200,000 during this time period. So that was it was Google AdWords. It took us a long time to kind of get our feet underneath and kind of establish those relationships and benchmarks. And once we did, we were able to really kind of build that flexible budget and really take advantage of some of those Google opportunities that were out there. So, yeah. Hey, Guillermo, I think you're on mute. I can't hear you.
All right. This actually takes me back to my hometown. My high school is actually Pioneer High School. Shout out to everyone from Pioneer. But our mascot was a prospector. Since we grew up in the gold rush area, we're in Northern California. When I think of myself as a marketer, I'm like, I picture myself as a prospector, and I'm looking for gold in different areas, right? So as a marketer, we're trying these different channels, and maybe we'll hit the jackpot and we'll get a return on ad spend that's $10, $20, $50. And we'll try to dig for as much gold as possible in that area. But then it'll run out, and then we'll have to look, go digging in another spot. But that's how I think about marketing, and especially in cannabis. Just think of it holistically, and just looking for the different places that you can grab revenue. And it just reminds me of the prospectors and just digging for gold.
Yeah, try new spots, right? You have to dig a new hole and see what's in there, and manage your investment. You don't want to dig too deep, right? If you're not finding gold, you need to move to a different spot. But if you do find gold, you need to be able to get the backhoe in there and dig deep and really go after it.
Yeah, 100%. I'll take a little pause break. We got about 15 minutes here left on the session. If there's anyone in the audience that would like to ask a question, feel free to post that question in the Q&A or in the chat below. Me and Mike would be happy to answer your questions. And let me take a quick break here and just double check on social to see if anyone has any questions there as well. So feel free to ask away.
I get a question, Guillermo. I mean,
yeah, go ahead.
Companies got all the different clients. I mean, how many? Or I don't know that you can sum up a percentage. Are your marketing customers thinking this way, thinking as investors, and building those relationships with the financial firms, or is there still some siloed nature to what you're seeing out there in the market?
I'm saying the top spend, like people who invest $50,000-$100,000 a month or more, they have more intimate relationships with the CFO. It seems like they have more flexible budgets. So I would assume that they're just more intimate with their communication with the C-level executive, CEO, CFO, and board members. Then I'm also seeing people that maybe a little inexperienced, and they're not sure how to communicate the results to that CFO. So if that's the case, their budgets are being cut, or they just don't know how to efficiently communicate those results to people, how to, whether it's a weekly basis, reading, I guess, just learning from the CFO and what they expect and how they want to digest that data, how often they presented with that data, what does it mean? Yep. You can't use marketing terms with a CFO, so making sure return on ad spend, like, okay, well, you can't use abbreviations or anything. You just say investment, revenue, and just keep things simple for them. So it ranges. It just depends on the technical aptitude of the marketer and the CMO. In a lot of cases, it's not the retailer's fault, but they're hiring bud tenders as their marketers, right? So, how can you expect a bud tender with little to no marketing knowledge to be able to present this to a CFO? Doesn't make any sense.
That's a great point. That's how I see it as well. Is you've got a lot of companies that there's people that are passionate about this business, right? They maybe go through the bud experience. They know the plant, they know the products, and they just don't have a lot of kind of business acumen, professional marketing knowledge, and know how to kind of communicate that. And those are, I think, the people who are struggling to get additional dollars and to build a budget. Whereas the companies that are a little bit more professional, they may be bringing in marketing people from other categories that have expertise and have done this at other places and kind of know the ropes and how to communicate. Those are the ones that are being more professional, more aggressive, and kind of taking this more investor-based approach. So I think a lot of it has to do with just kind of the maturity of the market and the kind of the experience level of the people that are in these roles at this point is it's going to improve over time. It's ripe for professionalization.
Yeah, and on my side, I always want to provide value. I always want to ensure the success of our advertisers that we're working with, and sometimes they think these guys are just trying to get more money out of us. So that's not the case. We're trying to actually make you more money, and if we're making more money at the same time, like, it's a win-win for everyone. But it's not. There's certain levers that you can pull that we know that work, and there's a reason that we're recommending these to you. We're doing our research, whether it's a new channel, whether it's you're underspending on a channel, whether it's a competition is dropping off, or if there's some market factors that come into play, whether there's some opportunities for you to capture market shares, to be aware of that and to act fast. And I just don't see people pivoting that fast with these campaigns. Like, working with you is every month we're making changes, we're throttling this campaign, we're reducing this spend. But that's not the case with too many CMOs or VP of marketing at any of these MSOs. Like, it's you get this budget for the quarter and that's it. And don't talk to us. Yeah.
The other challenge, I think, is in cannabis, companies being able to change their mindset between retail marketing, which is heavily performance based, versus product and brand marketing. And to me, they're quite different. You need to think about them and the underlying metrics and performance and investment and so forth quite differently. And when you try and blend those two, and which you have to do it when you're talking about the consolidated marketing budget, they get together, but being able to really sit down with the financial team and separate those and say, look, here's how we're addressing the retail side of the business. Here's how we're addressing the product side of the business, and that really helps with that communication loop, as well as the more you can kind of separate it and disaggregate it, make sure that the pieces are working from a kind of ground up perspective, and then be able to roll it back together to get that consolidated view. There's a lot of there's some financial gymnastics that you have to be able to support to be able to make that happen and understand that. But it's at least if you can have that understanding and think about those differently, you can kind of make some progress along those lines.
And it's also just, as a marketer, understanding the difference between like traditional marketing channels and then digital marketing channels that you can track, and how valuable data really is for, really showing your case and showing the results. And, it's hard to make the case for some of these tactics that have no attribution. And there's no way for us to know besides having the budtenders ask in the store, like, how did you hear about us? But that's pretty much it. Right. So it's, data is king. There's a reason that Facebook, Google, even Tesla, right? They're a data company too. There's a reason that they're the most valuable companies in the world, and data is more valuable than gas now. So, well, maybe not now, but used to be.
Right, it changes. That's another thing. It could have been more valuable than gas a year ago, and the market changed, and the underlying financials has changed, and you have to be able to respond to that. But yeah, I think you hit on another point there is being able to bring concepts from other markets. That's vitally important. Cannabis is different, right? It's got its own challenges and so forth, which creates unique opportunities. But you need to be able to kind of keep your head up and be able to see other opportunities and other categories that you can bring into cannabis and have some success with.
Agreed. Well, we can wrap it up a little early here today, Mike. Anything that you'd like to cover before we part ways today?
No, I think just to sum it up, thinking like an investor as a marketer is very important, and building that relationship with the financial part of your organization is critical, and understanding their tolerance for risk, their perspective on performance versus brand. It's going to be different in different companies, and making sure that you're on the same page, how you're investing that money, and you can communicate to them the results. That makes the wheels, spin much more easily, makes the business grow, makes all those conversations, much more productive. So building those relationships, thinking like an investor, will help, I think, every marketing department grow. Yeah, and thinking like an investor, and also just problem solver, right? Fix these problems, find the gaps in your business, fix the problems, dig for gold and everywhere. see what works, see what doesn't. Don't be afraid to pivot quickly, and you'll be in good shape. So, well, thank you, Mike, for joining us today and for sharing with your insights with everyone, with our audience. I truly appreciate it, and really enjoy working with you, over the last few years. Yeah, absolutely. Glad to be here, Guillermo. It's good to talk to you. Well, thank you again. And once again, thank you everyone for logging into the Cannabis Marketing Live podcast, where we cover the latest marketing strategies and trends that are most effective in growing your cannabis dispensary, delivery service, or brand. This podcast is sponsored by MediaJel. MediaJel is a leading cannabis marketing platform, helping cannabis brands and retailers reach consumers through mainstream media channels like programmatic advertising, SEO, paid search, and beyond. So check us out at MediaJel.com, and we'll connect with you next week. Cheers.